Please remember, all of the ideas and information that I present on this channel are my own opinion. They're for entertainment purposes only. Don't take this as guidance for buying or selling any type of investment or security. I'm not a financial advisor. Nothing that I say on this YouTube channel or anywhere else on social media should be seen as financial advice. I'm sharing my own opinions and speculation based on my experience and my own research. You can lose all of your investment. Please do not place trades based on the opinions of others, but instead base your strategy and your trades on your own research and due diligence. Good luck. I started my channel as a live stream on the Dividend Growth Investing group on Facebook. I went live at 9 o'clock every weekday morning for about a month and a half. The original video that I did on OXLC was a video clip from that live stream on Monday, June 8th. I don't want to delete that video, but the quality was not up to the standards that I want to set, so I thought I'd come out with another video that follows my usual format in better quality. Oxford Lane Capital is a closed-end management investment company which tries to maximize total return by investing in debt and equity tranches of collateralized loan obligation vehicles. Originally, they were founded in June of 2010. They held their IPO in January of 2011 at $20 per share. First question, what is a CLO? Collateralized loan obligations. Well, they're a form of security where payments for multiple mid-sized and large business loans are pooled together. Everyone should remember the financial crisis of 2008, when collateralized debt obligations were all the rage. This is where debt instruments are sliced and diced and then sold off to whomever will buy them at whatever price the market will bear. First impressions. The stock price of OXLC is $4.10. I would consider this a penny stock. Usually anything less than $5 is pretty much a penny stock. Are they a household name? No. Well, only in circles of high dividend hunters, because their dividend yield is high enough to get people's attention. Their customers, they buy corporate debt instruments. Market cap $308 million. They're in the financial sector, and their industry is bank loans. I mentioned that their IPO price was $20. Here's what's happened since they had their IPO. This graph is from TradingView. It's basically been going down the entire time. Let's look at dividend history and dividend growth. Well, growth is negative. Minus 12.28 over 3 years, minus 8.31 over 5 years. They have a little bit of a jump in 2013, but then they collapsed. Their next dividend, well, the original announcement they're sticking to. This was from February 4th, and they said that they would pay $0.135 per share on June 30th for shareholders of record June 15th. Ex-div date is June 12th. However, they came out with an update on their NAV on May 4th, and they said this: while no decision has been made with regard to the company's common stock distributions for July, August, and September, we believe that the company's board of directors will likely elect to reduce or suspend the company's distribution for those months. In light of current economic and market conditions, specifically as a result of the global crisis caused by the spread of COVID-19 virus, we believe that no reliance should be placed on the prospect for any particular level of common stock distributions for those months or for any other periods. Here's their yield on cost. Going back to all. The further back in time you go, the smaller the number. As a dividend growth investor, I would rather see that yield on cost go up over time. Total return? Well, the blue line is the S&P, and they have been lagging behind the S&P almost the entire time. Here's the COVID-19 crash, and I would not consider that a recovery. Remember, total return is both price and dividends. So let's see that. Here's the price that has fallen pretty much the whole time, and the dividends tried to make up for it, but they didn't. Let's go to Seeking Alpha and look a little deeper. So let's see, there it is. Here's a report from May 4th, where they reported quarter 4 earnings. May cut, suspend dividends, shares dive. Here's the momentum tab, where we can see total return, minus 25.71. If you're only looking at price, it's minus 72.58. They have not been doing very well. Dividend yield. This is what's getting people's attention, 39.51%. But as we just saw in the statement from May 4th, that's not trustworthy anymore. Their payout ratio is approaching 100%. They're approaching the limit, and I don't even know where that number comes from. And the growth rates we've already seen. Their full dividend history is a fall from grace. They were paying quarterly for a while. In 2018, they started paying monthly. I don't think they can keep up with it. I would not get into Oxford Lane Capital right now. If they can figure out how to make a profit and they grow for a couple years, they might qualify to be on my watch list. But I don't recommend them to anybody right now.